Hello, everyone, and welcome to the podcast. I am Michelle Moses, your host, and today we are going to be talking about luxury Airbnbs. I am very excited to talk about this. I think I say that every week, but I really am excited about all of these topics that we talk about, and mostly just so that I can learn about them too. And today, to talk about this, I have Ross Greenberg on the show, and Ross is the owner of Luxury Cashflow. Founded in early 2019, Luxury Cashflow addresses what he felt was a void in the market. Investors seeking to generate meaningful income from rental properties in large-scale homes that were sitting on the market, being overlooked by the retail customer. I invited Ross on because I saw that many of the regular, quote-unquote, Airbnbs had reached their saturation point, but the luxury space was still profitable, and I feel, and when I called him, I felt like it was a place where, there was space to grow and people could actually still purchase the property. So thank you for being on.
Thank you, Michelle, for having me. Thinking about me, and I'm excited for us to kind of dive a little bit deeper.
Yeah, as I talked to Ross, it's fascinating, all of the numbers that go into all of this, even before you purchase the property. So I'm excited to share this with you. And so why don't we start out with what the definition of a luxury rental is?
Yeah, so generally speaking, when we shop with clients and I shop on the market for a luxury Airbnb, we're looking at properties that are generally going to be about 5 or more bedrooms, right around that $2 million and up price point. You just start to get to a point of diminishing returns once you get to about $3 million. So I think if, I was looking at all the houses on a bell curve, that kind of $2 to $3 million price point is really the sweet spot for maximum yield.
And we're talking about Phoenix market right now, guys. So if you're listening in like Kansas, this could be completely different and you'd want to do like an apples to apples. But this is for the Phoenix market, what we're talking about. But Ross, we could help in any industry, but we're going to be talking about numbers in the Phoenix market. So, okay, so between 2 and 3. So why does it start to be diminishing returns at 3? Just because the mortgage payments are so high?
Yeah. So, pretty much the top of peak season of what you can actually charge on a per night basis without it just being, too expensive for the large majority of the clientele that are looking in this market to run a property is going to be about $3,500 a night. For it to really cash flow at, $3-4 million properties, particularly if you are servicing debt and kind of maximizing your leverage, you really need to be able to get, $4,500, $5,000 a night, which seems to be a little bit of a stretch for what people are willing to pay relative to you can still get a really, really awesome house with tons of backyard amenities and pretty much everything you're looking for kind of that $2,500 to $3,000 a night rate, which is kind of what we want to shoot for.
Okay, so you're kind of shooting for the lower rate versus like 5,000, because then you're kind of pricing yourself out of the market.
Kind of price yourself out of the market, and you kind of need to get those rates in order for it to make sense at the end of the year when you're looking at your kind of NOI relative to your purchase price.
Okay.
So, everything we do is really very cap rate driven. So, we want to target 8% cap rates and above, and yeah, we found that $2 to $3 million price point to be kind of our sweet spot.
Okay. And you guys, the cap rate is basically what your return NOI, what is it?
Yeah, NOI is the numerator, and then the denominator being the purchase price.
The purchase price of the house. And so that is something that you're always looking at when you're looking at commercial property or any type of Airbnb.
Yeah, exactly. When you think about underwriting an asset for investment purposes, we do take a lot of kind of commercial underwriting approaches for kind of these residential assets. And yeah, we at the end of the day, we want to find the best performing asset classes. And in the last probably 4 to 5 years, it's been tough to beat Airbnb.
Yeah, it is. Well, and as I said at the beginning of the show, I call it first, I think like 6 months ago, I was like, I don't know about Airbnbs, but the luxury market, I mean, it's definitely still hopping, where I feel like the regular market, some of the basic Airbnbs seem to be kind of falling off the market, or people that couldn't compete, because if people are going to be paying as much and a cleaning fee and all of these things, they want to feel like they're staying somewhere, right, nice and with a kitchen. And
yeah, I mean, so the demand side of the market has changed. 10 years ago, people weren't willing to drop a credit card for $10, $20, $30,000 on a website, VLBO.com, Airbnb.com. Those websites have done a really good job building trust. People like to travel in groups. It's also more economical. If you think about, just thinking about, let's say, a bachelorette party, if they have 14 girls and, they're looking at reserving 7 rooms in a hotel block that were kind of next to each other, really a cost per person per night basis, they can get a $3 million house for literally less than, 3 or 4 star hotel and just getting a block of rooms.
Right. And it has a grill.
You get the amenities and you can do the private chef. And there's just so many kind of what I call experiential services that are now offered in lots of vacation markets, not necessarily exclusive to Scottsdale, but in tons of them. But certainly here, there's tons of services to get the private chef to your house, to get the personal trainer for morning workouts, the yoga studios, the mobile spas for, pedicure, manicure. I mean, all that stuff exists. It's being heavily promoted. People find out about it on, TikTok and Instagram, and they, get real excited about booking these Airbnbs that offer a lot of space to kind of enjoy some of those third-party amenities.
That's awesome. And so do you help them?
Yeah. I think now, most property managers have included some level of concierge service, whether that's kind of an airport pickup or, if they can't check in early, which is a really popular request, we can help facilitate, getting their bags from whatever bar in town they're going to, and we'll drop it off and, have someone drop it off at the house. So yeah, there's definitely, I think most property managers have kind of adapted and offer to some degree, either referrals or in-house concierge services.
Yeah, I think that sounds amazing. And you're probably suggesting some of these things, and it's things that they didn't even know that they could have.
Totally. Totally. Yeah, no, we get a lot of requests for, people that want to set up the house with balloons, and they would need to, one of the girls needs to sneak away from their group to kind of set the house up early. And hey, for $125, that there's services out there that'll do all that for you. You don't have to kind of sneak away from the bride, from the bridesmaids and all that stuff. So
wow.
Yeah, tons of really cool services.
Yeah, absolutely. And I would imagine that it's always evolving, people adding things and yeah. Oh, that's cool. Okay, so back to buying the house. So, which all of that sounds cool. We're going to come back around to all of that. That's a fun part. Which people are purchasing a house. So do you find people that they come to you to want to buy Airbnb and then you kind of talk them into a larger home because they can make more?
Sometimes. The first thing I like to figure out when somebody does approach me to buy a property is, how much of this property is like truly a second home for you, where you're going to go with your family and host friends, host family, and really maximize the usage of your home for your personal reasons, or how much of this home is actually going to be used for cash flow purposes. Are you going to use the property a week in the year, or are you going to use the property 6 months out of the year? So that's going to be really, just to kind of get an idea, like where, where they're thinking, where their head is at for how much they're actually going to use the property and their intended purpose.
And you call that an emotional person that's going to use it more as more of an emotional buyer.
Yeah. I mean, I certainly want to kind of cater what I show, and certainly like my opinions on, their needs. Like if they're going to use the property a ton and it's maybe not in the, best location for rental purposes, or maybe just doesn't have that extra bedroom that we like to see to maximize cash flow, but they love everything else about it and they love the finishes and they get a great feel and they could see their family enjoying themselves for the holidays, then it's like, okay, let's, take a step back from a financial perspective. And yeah, it's your second home, it's your vacation property. Like pick something that you're going to enjoy. So
right.
Yeah, totally. So that's really the first thing I like to figure out.
Okay. So there's kind of two buyers, one of the emotional buyer that wants to use it for themselves, and then just pure cash flow. Like they're just wanting to just have a business.
Yeah, I mean, there's certainly a combination of the two as well. I mean, I like to a lot of my owners who kind of came in as, strictly cash flow investment, buyers, still want to try to use the property, get in there maybe once a year, twice a year. I'd still call that a full-time investment property, but, certainly will block off, a week or two.
All right. And so once they identify a property, they've obviously already met with a mortgage broker if they aren't buying it for cash, and have gone through different things. And I do want to point out, you guys, I actually dropped an episode and we were talking about different mortgage options. So I'm not going to go over all of them, but when you have a rental, there are what these call debt service coverage ratio loans. And do you want to kind of talk about what those are?
Yeah, sure. So, sometimes we'll run into situations where someone has the liquidity to put a down payment on a property. They have the 20 to 25 to 30% down. Whether they're self-employed or whether for a variety of different reasons they show little or in some cases no income just for tax liability purposes. I'm sure you speak a lot about that in people on your episode. I'll certainly talk a lot more about that. But those type of people are really qualified buyers to be investing in properties like this, but maybe they don't have the ability to, or the W-2 income or the tax returns to really get a conventional or jumbo mortgage. So there are kind of these alternative loan programs that have become very popular called, the DSCR, the debt service coverage ratio. And the way the mortgage lenders will underwrite those loans, those assets, is based on the projected rental rates on an annualized basis for that property. And if those rental rates, if the gross rental revenues can cover the debt, usually a dollar for dollar ratio, then they'll qualify that house to offer a loan. And those loans are still 70 to 75% leverage, which, 25% down.
Yeah. So that's still, I mean, that's good. And so all you're using is the potential rental rate of the home.
Yeah, exactly. And, the way those are underwritten are a variety of different ways, but Airbnb, I mean, the data and the analytical way that a lot of these technology companies are projecting rental revenues are getting better and better. It's not perfect, but it is a really nice alternative way for somebody to get into these properties by paying just a little bit of a premium on their interest rate.
And that's what I was going to ask you. So did the mortgage brokers, do they come to you for what is the potential rent, or is that all done online?
So they do that in-house. They use a lot of the same tools, frankly, that I use to project rental revenue. There's not too many of them out there, so we, use a lot of the same ones. But yeah, I do find that, these bigger houses, especially in the luxury space, they tend to qualify more than, maybe some of the run-of-the-mill houses, which, again, when we talk about luxury in that kind of $2 to $3 million price point, a minimum, like just as far as search criteria go, we really like to look at a minimum of about a 5-bedroom. Ensuite bathrooms tend to be a really huge amenity. So, we'd like to have about, we can get a 5-bed, 5-bath, or a 6-bed, 5-bath with several en-suites. That's usually going to be kind of a bed bath count that we want to look for. And, we want to definitely see the outdoor living space. There's no question that the outdoor amenities is probably the number one draw for people coming out here.
And so do you help them put those in if they're not in there?
Yeah. So just taking kind of a holistic kind of step back and view of everything. So when people think about, want to get into this space, there's kind of 3 sort of primary factors they need to look at. The first is finding the right asset, right? If they're going to buy a $2 million house and there's 75 active listings in that price point, they're not all created equally. So really finding a realtor or some resource that can help them identify kind of the best assets for cash flow opportunities is really going to be critically important. Finding that, and then the second kind of component would be the design and onboard of the property. So, largely houses are sold. I turn down significantly more opportunities to manage properties than I take on. I even just with the investor client as well. Not just the house, but so the boutique feel is really serving.
Okay. And do people come to you? I guess they probably come to you even to buy a house, but even after they purchase the house, that hey, I need you to manage this.
Yeah, I mean, for the most part, I like to be involved in all 3 stages, from the acquisition as a realtor to the onboard and setup and kind of management of that whole project of getting that house up and running. And then lastly, the facilitation of creating all the listings and getting it synced into my channel manager and actually getting it rented and profitable. So I like to be involved in it as much as possible. I've certainly been involved on the first, which is just the transactional side of things. I've been involved on the third, and in some cases even I've only been hired as a consultant to project manage a house that I really didn't sell or I didn't have any plans to manage.
Just helping them, just consulting on how many bedrooms and what to do with them.
Exactly.
Yep. Okay. And you guys, I think it's really cool. So Ross taught a class quite a few months ago to our brokerage about looking for these properties and what you would look for. And there's a lot more that goes into it. I mean, I think that that's what I found so fascinating was, you think like, oh, I'm just going to go buy a house and whether it's the right price and then I'm going to throw some stuff in it. And it is so much more. I mean, there's so many more details. So could you just go, I don't want you to give away like all your secrets of how you look for a house, but could you like share some of them?
Yeah. I mean, I think the reason why I wanted to create this company, Luxury Cashflow, is because there was such a disintegrated system for getting short-term rentals up and running.
Oh my God, right?
So let's say a customer from Washington, they know their cousins, brothers, nieces, uncles, a realtor in Scottsdale. They call them up, hey, I want to get an Airbnb. That person, that realtor, 95% of realtors, especially in Scottsdale, they understand Airbnb. They know what it is, but they don't know anything beyond like actually how to underwrite an asset, how to actually select a property that's maybe going to perform at a 30% clip compared to another one down the street. And so, they say things like, oh, it's, 25 minutes from the airport, or, oh, there's tons of golf courses around. And they're just not offering a ton of really kind of valuable insight that investor
would stand out.
Yeah. And that's really what that investor is looking for. They want a expert, knowledgeable resource. And, certainly a lot of people can write contracts out here, and you throw a rock at a realtor, right? In Arizona, as we always say, but
here we are.
Yeah, exactly. But yeah, there's not a ton of people who really, truly have given it a deep dive and really understand it. And then once they facilitate a transaction, they're calling their broker, hey, who manages properties in town? Most, it's changed over the years a little bit more, but 3, 4, 5, 6 years ago, most realtors didn't know who in town was managing a short-term rental. So they called their friends, called the grapevine, and linked them up with somebody that was never really pre-vetted, that they don't actually know who they work with. That property manager would kind of use different resources, a designer here, a designer there. And it was, again, very disoriented, disintegrated, not streamlined at all. And so I just wanted to bring all of that together and kind of create a 1, 2, 3 step process to, I want to buy an Airbnb, to, this is a profitable Airbnb. And so,
good business for you too. I mean, you can help them buy the property and manage it and be making money, over the long term. So it's not like, like you're not having to redo transactions. You've got like a steady income plus the...
Sure. I mean, yeah. And for anyone in property management, I mean, managing the property is never really like, there's a lot of pitfalls to managing properties. It's not always the most glorious job that, what you have to deal with from time to time, but it's a great annuities business, and it is, recurring revenue for the property manager, and your interests are extremely aligned with the investor. On bad month for the investor is going to be a bad month, financially for the property manager as well. It's all usually based on a commission model. You get a, percentage of what you book it for. So,
okay.
But yeah, back to your original question, some of what we look for, number one thing that we try to do is stay out of homeowner associations. They'll either kick you out or try to kick you out.
Okay.
You never get to do it. They're never just going to say, oh yeah, it's against our CCNRs. Yeah, you guys we like you. You're cool. Just keep doing what you're doing.
Yeah.
So yeah, let's avoid that as much as possible. So the first thing is stay out of the HOAs. Like I said, the second thing, which kind of...
Sorry, this is going to be very Phoenix specific, but I mean, like out in Gilbert and out south, I mean, it's all HOA, isn't it? I mean, so there's but this is just your criteria.
This should be everyone's.
Right.
HOA, I think it should be everybody's criteria.
I mean, but there are Airbnbs out there, so people are obviously...
Well, to be fair, some HOAs do allow for 30-day rental minimums. So, I know it messes up the model. Yeah, 30-day minimums, they can work. It's a lot harder. It completely changes the pricing strategy. I mean, I do 3-day minimums. My pricing is generally in 3 tiers. I have kind of a lower tier, a medium tier, higher tier. Yeah, the 30-day minimums just isn't my fault.
Yeah.
Some people do it.
Okay.
But
sorry.
Yeah, no, okay, totally cool. And so, yeah, the first thing, we want to do is stay away from the HOAs. The second thing is, we do want to find large enough lots that aren't totally hugging up against other properties, mostly because we want to respect the neighbors. I mean, we understand, like, we're not there. Some people misrepresent how many people are going to be staying at the house from time to time. And yeah, the more kind of insulated we are from, the neighbors and the street, which a lot of times we can accomplish with landscaping and some other things, is definitely something we look for. Like I said, that 5-bedroom, if you asked me this question 2 years ago, I would say you have to be at a 4-bedroom minimum. Again, saturation's kind of creeping upward, and now I really want to be at a 5-bed, probably a 3.5 bath as like a bare minimum. And a really nice sized lot with a pool that has the capability to be heated. Has to be.
Right. Well, yeah, because people are going to come here in March and want to.
So I would estimate between November and the end of April, the percentage of groups that request and pay a daily rate for pool heating is probably somewhere between 95 and 100%.
Wow.
So it's a must.
Wow.
In the house, I eat it.
That is a very high percentage.
It's
totally
reservation, if not almost every reservation, from November, even sometimes in October through the end of April.
Yeah.
Wants to make sure that pool's heated.
Yeah. Okay.
So,
wow.
So yeah, I mean, we want to have the capability of heating the pool. We want to have...
You could ask this.
You can add a heater.
Yeah.
There's several ways to add a heater.
Okay.
A lot of properties here in Scottsdale are on gas. That's the easiest, is to throw a gas heater in. If they're not, there's electric heaters. You could also, drop a propane tank in and heat it, which is probably the most expensive way.
Right.
It wouldn't.
And most labor intensive.
Yeah. But yeah, you could control all that stuff through an app. You don't have to physically be there.
Okay.
Yeah, I would say, pool, great outdoor living, 5-bed, 3.5 bath. Really want at least 2 of those bedrooms to have an ensuite, preferably more. And if you can get 2 under roof living areas, I would say that's a plus. When I say living areas, like have a media room, for example, like a den in a way where people can kind of watch movies. Maybe the kids are watching movies and then the adults are kind of sitting in like a second kind of seating situation, living room.
Even if they have the outdoor area.
Even if they have the outdoor area. Like we like to have 2 kind of living spaces under roof and then as many amenities that we can kind of fit into the backyard. I don't want to overdo it and make it look too busy, but if we had the space, if we'll drop in, last year we dropped in a couple of pickleball courts, which has been a super hot amenity. This year we're looking at converting a master bath extended patio into kind of a wellness space, dropping a cold plunge in there, a dry sauna. We just kind of look at some trends and so that's actually, what's catching people's eyes, what's a little bit different, how do we stand out? So I use the term every day, amenitize. And so, yeah, we definitely want to create these different experiences that stand out from the pack.
Yeah. Well, and I could see, you kind of need to, because it's always changing. And even what you just said, that a couple of years ago, 4 bedrooms would have been okay, but now 5 is what you need. And that goes back to exactly what I said, that it's kind of getting saturated and that now you're going to have to, I got to stay ahead of the pack in order to stand out. So, yeah.
Yeah. And I don't have the data in front of me, but, I would suspect that if you looked at every house in the greater Scottsdale area, that was a 4-bedroom, 3-bath house. And then you look at every house, the number of houses that were a 5-bedroom, 4-bath. So just going up 1 bed and 1 bath, I would say the supply is maybe only 10% of what it was for the 4-3s. So up in total number of 4-3s, only 10% of those, only 10% of that number is probably how many 5-4s there are.
Right. Yeah. Well, yeah, because people aren't building houses that big.
Yeah, and they haven't really been, this whole luxury space or side of Airbnb, Airbnb's been around since, I think, 2005, 2006. I mean, people have been renting spaces on Airbnb for a long time, but this side of the market, which there's a massive demand for, has really only taken off in the last, 5 to 6 years.
Yeah. Well, and I think that with Instagram and people posting pictures of their bachelorette parties, because that's immediately what I think of is, you're going on a group trip or, all your college friends.
I mean, to be honest with you, again, luxury, I do get a lot of those parties, don't get me wrong, but we're getting together for, the bridal party because there's weddings and they don't want to stay at hotels. They want to stay at an Airbnb. Great trips for someone's 50th, for their 40th, couples retreats. During the week, we get a lot of like executive getaways. They want to end of quarter, they're kind of getting together to do, whatever, to work, whatever. So it just, and then
that makes sense. That's a great idea.
Yeah. Tons of corporate retreat.
Yeah.
Type stuff. So I know that's the first thing when people think of like group travel, that's where their mind goes, like bachelor, bachelorette. And we do get a lot of that. And Scottsdale has been a hub for that for a long time. But that's, one of, 30, 40 different reasons that tend to come up regularly for reasons why people are traveling in groups together.
Yeah, no, I think some of those I wouldn't have thought of the executive group, because they get together to bond and have meetings and face story and all that. Yeah, absolutely. Okay, well, am I missing anything before we kind of sign off here?
Not that I can think of. We talk about the criteria. I think we talked a little bit about the seasonality. We
didn't really talk about that, about the difference in the different seasons, because when I was not interviewing, but I was asking what to talk about, and I was saying, well, how much would you make in a month or per night? And he's like, well, it depends on the month that you're talking about.
Yeah, totally. And I get that a lot. It's like, I buy this house, or hey, we're looking at this house, like, what is it going to rent for per night? And it's like, well, there's 160 price variations over a 365-day calendar year. So it's a really tough question to answer. So when I talk about numbers with people, I at the very beginning say, hey, look, everything we're going to discuss financially related is going to be annualized. Let's annualize our expenses. We're going to annualize our gross rents or NOI, et cetera. And so, I would say generally March, for example, which is our top booking month of the year, it's going to be